most people seem to like to complain, and it really drives me nuts. I watch the videos of the people talking about gloom and doom. I called them yo-yos the other day. I love the comment in the comment section who thought it was funny, but they are yo-yos. And what gets me frustrated with it, to get on my soapbox, is they encourage bad behavior. That's my problem. And I hate that people get so worked up, and I hate that it works. It's the same as the news. News that sells is bad news and scaring people, and the economy sucks and the world is terrible. So I get that's what gets clicks. I get that that's what gets people involved. The problem is, and I love YouTube for this because I really love the comment section and seeing how people think and what they say, but they get so worked up about how the government sucks and Trump sucks and Biden sucks and they're the reason I can't afford a house or whatever it is, that it sticks them in a position of not getting in the spot they're in. When if they could put their head down and not be so negative and just work on improving things, which I get it. It's so easy to say, and I'm sure some people are watching thinking, fuck you, buddy. It's not that easy. I know, I really do. But while it's not that easy, the end result of like putting yourself in a position where you start to save, and some people talk about the snowball effect and the compounding. It's amazing that once you get going, and even if it's a tiny bit, as you see an account grow, you get more excited about seeing it grow. At least me, that becomes, I enjoy seeing that. I get happy, not because of anything else, but I feel like I'm doing what I should to help save for the future. Now, my future is getting shorter and shorter, so maybe I shouldn't be doing that at this point, unfortunately, because I wish we could all live forever, but c'est la vie. Anyway, I just hope that people don't get too negative. I think that the people who do the videos that way are doing people a disservice. So I get really frustrated for it. I even chime in the comments sometimes because I get so frustrated. Because there's a few in particular who I actually like their channel because I find them entertaining. But man, they give such terrible advice that I gotta imagine people like, yeah, it sucks, it's terrible. And then they just continue to stay behind and don't do what they should. What one should is figure a way to either lower spending or increase income to be able to save, because it'll make your life better for those bumps that come around. Now, I do want to talk about how I use puts, and I'm going to use a scenario of something I did recently, and I hope it helps people to understand the value of options, because options can be really tricky. I think United Healthcare is actually at an attractive value. Not financial advice. I'll make the little disclosure at the end. At the same time, the news is negative, and it might be for a long time. It really may weigh on the stock for a while. For those of you who've been watching the channel, similar to Boeing, bad news, good companies, but the bad news can last for a very long time. And to be fair, even with Boeing, as recent as April, I think it traded down to $130 a share, possibly even below. And it made me really nervous before it reversed and went straight back up. Now, the concept on Boeing that had all the negative news was it's an American plane manufacturer. It's hard to imagine the government's just going to let them go out of business. And I figured one way or another they would find some contracts or whatever they needed to help make them profitable again, no matter how bad the news was at the time. Well, I feel similar about United Healthcare. They're a big company. Now, they have a lot of really bad news weighing on them, including, forgive me, I watch the news, but I don't pay attention all the time. The kid who shot the CEO, people want to hate the company because of that. So it is still a weight, even though it's not in the news so often. You then add to it that they had a rough quarter, which wasn't so bad, but it was under expectations, and the guidance wasn't quite as good as what people would have hoped to. Then you add the CEO leaving and them not giving forward guidance, and Wall Street hates having a lack of clarity. And then you add that they potentially were doing things with Medicare or Medicaid that they shouldn't be doing, and the DOJ, if I remember correctly, the DOJ is going after them for it. These are really bad things. Well, the reality is it's really bad news when stocks are at the bottom. But these really bad things could become worse They could get delisted. They could go on a penalty from Medicare, from what I understand, for up to 5 years. They could do a lot of things. At the same time, I still feel similar to Boeing that they're a big part of our healthcare. They're a big company that probably has some friends in places that can help them get through it. And some way, as we move forward, there'll be a solution that comes through where they're able to continue to profit. They'll pay some penalties if they did some things wrong. And God forbid they really didn't even do anything wrong. The stock will shoot right back up, which is not what I expect to happen. But there are all sorts of outcomes. And while this is what's in the news today, if you can get your brain to think out 5 or 10 years from now, is anybody going to be talking about the boy who shot the CEO from United Health? Are people really going to remember? And let's not forget, a lot of people get their health insurance from the company they work for. It's not their own decision. So even if they're up there in arms saying, I'll never use that company, I'm guessing a lot of them aren't even in the position to make the choice of who they use for their health insurance. They just get it from work. Is anybody going to remember that the CEO stepped down? Is anybody going to remember that they had a bad quarter, or that they stopped giving forward guidance when you go out 5 or 10 years? Probably not. And if you flip it around and just look at earnings and growth rate and dividend yield and things along that line, the company is at a bargain finally, and they hadn't been for a long time. That doesn't necessarily mean it doesn't go lower. So, how did I handle it? I used an option. I recognized that in my mind it made a good low not too long ago. It could go back down there, but it seemed to get to about $250 a share. I'm not looking. It could have been a little lower. It could have been a little higher. That's what I remember in terms of about what the bottom was recently. So I bought a very small position to put it on my screen, way less than 10% of what I even want to own of the company. And then I looked out to September and I sold a put. Now, the reason I picked September is there are quarterly options that tend to be consistent throughout all the different stocks out there. When I was in the currency quadrant, it was March, June, September, and December. Is that right? I think so. September, yeah, I think that was right. Sorry, brain, old. Anyway, that being said, I wanted to trade those because they tend to be the most liquid. They tend to be priced fairly, so to speak. And then I went to the $250 put and I sold one. What does that mean and what did I get? So I sold one, if I remember correctly, for about $14. Stock was trading around here, but it was really volatile. It had dropped down, gone back up. And to me, I'm getting, when I sell a put, you collect the premium for selling it. So I got $1,400 in my account for selling that put. Nothing's really happened yet. I have to fast forward to September and see where the stock's trading to see what happens from there. If if United Healthcare is trading below $250, by selling that put, I've committed to buying 100 shares at $250. If it is trading anywhere above $250, nothing happens in terms of buying the stock. The option expires, and I get to keep that $1,400. That's why some people say it's like free money, but it is in no way free money. At the same time, if I was willing to buy it, if it got down to $250, I am getting paid to put my order in now and leave it where it's kind of like a resting order to be able to buy the stock. Your risk is the thing collapses, it's down to $150. You got paid $1,400, but meanwhile you're down 10 grand on the trade because 100 shares is a $25,000 investment. Hopefully everybody kept up there. That being said, the way that my brain thinks of it, two levels. Not only would I buy 100 there if the news was still negative, but nothing that made me nervous that I think they're going to get delisted, or that they're going out of business, or that the lawsuit is so much worse than I thought and they're going to not be able to collect Medicare for the next 5 years, and so on and so forth. As long as it's still the same type of stuff, and I think they're going to figure out a solution. It's just a matter of time. I'd be willing to buy the 100 shares there, and if the stock fell even lower, I would probably be willing to sell another put and potentially buy some lower. That's why I'm comfortable putting on the trade. You have to be careful because while some people are talking online about how options are free money, it really isn't free money unless you really are willing to buy a stock if selling a put or sell the stock that you own if you're selling a call. The way that my brain works, so it's mid September, it's about 3.5 months out. If I were to annualize that, I could do it about 3 times throughout the year. So if I take 1,400 and multiply it by 3, that gives me 4,200. The stock, if I use the price that where the put is of $25,000, because that's how much I'm willing to put up if I have to buy the shares. Well, if I'm getting a $4,200 dividend over a year on $25,000, my God, that's probably ballpark. I haven't run it. About 17, 18% yield. That's pretty good return to potentially not even own the stock. Now, I leave the cash on the sidelines in case I get filled. I don't go spend it on something. I don't invest it in other stocks because I recognize the risk that's out there. So I have to have the cash, but I can also put it in a high yield savings or something that I'm getting a little bit of interest at the same time as well. I could even buy a CD with it if I really wanted to and just leave it in the account knowing that it's committed if the stock's below that price. I love these strategies. Now, keep in mind, I feel like United Healthcare is already at a really good price. I don't know how it'll play out. It took a very long time on Boeing for it to play out. The things with the CEO using the planes for personal use, the plane crashes that they were having, all the things going on that was so negative in the news, which is what made the stock really cheap. That's kind of how I feel right now about United Healthcare. The news is really negative. And similar to Boeing, I think they're enmeshed in a industry that they're big enough that it's hard to just get rid of them and let it be split up amongst the other companies. My guess is, and it's just a guess, they'll figure something out and the stock will be higher in time. And 5, 10 years, most people aren't even going to remember this stuff. Which brings me to my other bad news, good company, Target. The reason I like Target so much is a little bit similar. And I feel like Target is getting closer to the point that the bad news is beginning to fade. Now, like Boeing, it could bounce up and down a while, it could stay at these levels. Things take a long time to kind of flush out before there's some good news that helps drive the stock prices higher. Also, the bad news could get worse. So I don't want to be that guy saying that this is a guarantee or anything like that, because you guys who watch me enough know that I never do that stuff. I never say that I guarantee X, Y, or Z. I just think Target is in a similar situation with all the woke, the not woke, the store closings, the theft, the all the hatred of Target, which is driving the stock price lower. The same time, what I've talked about in the videos is they use about 50% of their earnings to be able to pay the dividend. That's very little. It gives them room to be able to continue to grow the dividend, even if earnings continue to decline. What's interesting is in-store earnings have declined significantly. It's like down 10% over the past 2 years. But to be fair, their online sales have gone up significantly. And people aren't really paying attention to it, which is the thing that I really like. So keep listening because I'm going to tell you something I learned about that I thought they'd probably do, but I now realize they're actually working on it, so it should be coming somewhat soon. Target's able to pay their dividend easily. It's around a 5% yield currently, and they tend to raise it at like 4% annually. So you're starting at a pretty high dividend rate. They have room to be able to grow that dividend even if things slow down. They also do share purchase buybacks, and they grow their dividend typically. I think that's a really good situation. Not financial advice. I'll do the disclosure at the end. So, what's the thing that I really like that I learned about Target that's going to be implemented sometime in the future? They're going to start taking on storefronts. What I mean by that is online storefronts similar to Amazon and similar to Walmart. so that they can start competing in that space. Now, I kind of kept looking at Target's online, and I know that they've been working on it and their sales have gotten better. But I love the concept that they're now going to add online storefronts, because then they can just push through pretty much any product and they can start to compete with Amazon. And these things take time. What I kind of wonder is, since they have so many locations and they have so many stores in brick and mortar already, and they started trying a thing. If anybody's used it, make a comment in the comment section. I'm curious how well the system is and if it works. But not just the pickup where you can pull in a spot and the person will drop it in your trunk. But I think they've even talked about, if you sign up for their what's it called, their red circle thing, that they'll have delivered to you in 2 hours. How smart! Like, if you, most of us live very close to a Target store, as long as it's certain items that they already have the store, they could really be able to get things to people in a really quick amount of time. And I think that would be an amazing ability to compete with Amazon in a way people just don't see coming. The other thing is, if they start turning part of the store into warehouses so that they can really do it with a lot of product, I think they could be really competing against Walmart and Amazon much more than people give them credit for. Now, I am not a lover of Target. It's not that I think they're such a great stock. It's more that they fit the design of what I try to look for of bad news on good companies. I would not put Target in my A plus category. I would put, Costco, and I would put Amazon there. But when I include valuation and, in my mind, where the stock is in terms of their earnings and their growth rates, similar to United Healthcare, they seem to be in a really good position, and they're a lot less expensive when I'm looking at those metrics, is that the right word, than something like Walmart. Their PE is lower, their growth rate seems to be just as good, their dividend increases seem to be just as good, and they're way less expensive on a PE level. So that's what I love about Target. I also think Nike's pretty discounted right now, which I've mentioned in other videos. But keep in mind, I, I still have the Amazons and Googles and Metas in my set it and forget it account. I do own Target, and I did buy some Nike not too long ago in my set it and forget it account for the same reason. I kind of want to close my eyes and ears for 5 years or so and not worry about OnCloud and not worry about their competitors, and just see if they're able to work their way through it and end up back in a good situation, which is what I find good companies can usually do over time. Now, disclaimer, this is not financial advice. By all means, do not listen to me. I am just some idiot on YouTube sharing what works for me and my ideas. This is just entertainment purposes only. When you're making your financial decisions, you need to do your own research and potentially even reach out to a financial advisor. Because beyond the fact that maybe I'm wrong and I don't want to be held responsible for anybody making a decision based on what I say, we're in different situations, so there's really no reason to follow my lead. You need to see if it fits your investment objectives. Anyway, I'm pretty proud that I did pretty much almost this whole thing on one, didn't even hit stop or anything. So what I'm going to do is I'm going to kind of call it quits, which, I was going to talk a little bit more, but I was going to pause and decide what else. And since I haven't figured it out and going a nice long time just on one recording, that I'm going to say, could you do me a favor if you haven't already and hit that subscribe button, smash the like button, make some comments in the comment section. Let me know what you guys think about the economy, because I think we're all going to continue complaining and it's going to continue to keep chugging along. Have a great day. Today is Thursday, if I didn't say it earlier, getting close to our little trip, so I'll warn you again, I may do less videos soon. Thanks, guys.